The crypto market is red, red, red. We got war going on in the Middle East. New Middle East war delivers a new threat to the world economy. Is this going to take down the crypto market? Is this a black swan event? What do we have to do? How worried should we be? That's the question I'm going to pose in today's all-new episode of Cryptowise. Hey there, Cryptowisers. It's your good friend Milty here, flying solo today. Marvin is traveling, but there is too much to talk about not to hop on and do an episode today. Clearly, with the big news of a war starting out in the Middle East, we see big red candles everywhere. Bitcoin is down, but the altcoin market is down even bigger. We already have the war in Ukraine. Now we've got the war here in the Middle East. People talking about China trying to take over Taiwan, the U.S. dominance falling. What is that going to do to the world economy and, more importantly, to the crypto market? These are all questions we got to ask today and have a look at. But before we do that, please do me a favor and smash that like button. Hit subscribe if you haven't already. We just relaunched the channel a couple of weeks ago. We're not in anyone's algorithms, so we could really use your help, and smash that like button. Thank you so much. While you're at it, please make sure that you are following us on X, aka Twitter, at CryptoWiseGuys, at CryptoWiseGuys. All right, guys, let's get right into this. How worried should we be? The honest answer is nobody knows. Look, obviously we're on a down day here. There is a lot of turmoil in the world, which could mean a black swan economic event. The good news is we have seen these before. Now, a worst case scenario we're talking about back in the COVID crash. Now, if we scroll back to the COVID crash, we will see that little dot is right here, March of 2020, right before the last halving. We saw Bitcoin go all the way down to about 3,800. It was hovering about 9,500, went all the way down to 3,800, and then from there we just climbed up to our new all-time highs at around 69,000. Now, we do not know if this is going to be a black swan event. This could be a nothing burger in terms of the markets. Obviously, I'm not actually talking about the war or the politics of it or anything like that. To me, I think all wars are awful. I wish there were no wars in the world. I hate to watch people suffer. It is just so brutal. I don't condone any violence of any kind. But I'm just talking here from an economic point of view, especially how it pertains to the crypto market. I think that we'll know in the next week or two, basically, if the market stays stable over the next 2 weeks, I think that we will be okay. But I do think we should be cautious over the next couple of weeks that at any moment, if things escalate, if something else happens in the world or something, there could be a lot of panic in the market. Now, it's just about being defensive. Now, there are things that we need to kind of do to be defensive in these times, in these kind of volatile, uncertain times. And obviously, one of them is just making sure you have enough dry powder on the side. One, to kind of, pay for your expenses, make sure you've got enough money to buy yourself all the necessaries, the food, the shelter, all those things. And you want to have, enough for, a little runway. Okay. Once that's taken care of, then it really depends on your situation. If you got a lot of income coming in, you're probably fine. You don't really need to worry about changing your strategy all too much. You can just keep DCAing in. That's what I would be doing all the way through to the halving and beyond. But if you're lower on income and really you live off of a lot of your investment revenue, which I happen to be more along those lines, I would say that you're going to want to kind of take your foot off of the gas pedal a little bit and make sure that that you're being a bit more cautious than you would normally be. Now, in the long run, do I think this changes anything? No. Now, a lot of people were wondering with the cycles, because COVID was such a crazy kind of black swan event, we did see that huge dip right before the halving. A lot of people were wondering, well, would we see another huge dip in Bitcoin and the whole market before the next halving, which we are expecting next May? As you can see here, this is the big Bitcoin clock, the Bitcoin halving countdown. We're down to 181 days approximately. So this is going to be coming quick, okay, which is the good news. The good news is time is moving along. We're less than 200 days away from the Bitcoin halving. Now, that doesn't mean that we're going to have a huge pump before that happens or even right after that happens. But if you believe in the cycle theory the way that I do, we're looking at most 6 to 8 months after the halving will start being good times again in crypto. Now, it could happen a lot sooner than that, but that's kind of the traditional timeline is, 6 months after the halving-ish, we'd be looking at hitting our old all-time high, which was about 69,000, and then kind of moving towards and beyond that. So anything that happens before that timeline, the halving and the kind of year, 6 months to a year post-halving, you can't really worry too much about, no matter what's going on, if you believe in the 4-year cycle. Now, it means that back then, now, when COVID hit, I was all in here, okay, when COVID hit. I had my bags packed. I was anticipating the halving. At that point, before this cycle, we thought there would be a pre-halving pump. And then COVID hits, and we dump really, really hard. Now, thankfully, I didn't have to sell. I was in a position where I didn't have to sell that Bitcoin, and thank God I didn't. And that's all I am saying now today, is that you don't want to be in a position from now until the halving and beyond where you have to sell your Bitcoin. So make sure you've got enough money going around, that you've got a good strategy in place, that no matter what, you're not going to have to sell your Bitcoin, because there could be a huge crash before the next halving. In an ideal spot, you would have some dry powder to buy that huge dip. Some people will, some people won't, but at the very least, you don't want to have to be in a position where you are selling your Bitcoin during that dip. Because I can tell you, during that COVID time, there was so much uncertainty in the world about this pandemic and everything. It was really scary. People didn't know what was going to happen. The whole economy was crashing. So if there is another black swan event like this in the economy and everything starts crashing, it's going to be very hard to hold on, because it's not just easy to, in that moment think, oh, I'll be fine. Things are going to be fine. That's not what happens in these black swan events. They are scary, okay? They are very, very scary. You don't know what's going to go on. So being able to hold through them is key, because obviously if you were able to hold, if you didn't freak out and sell your Bitcoin in March 2020 and you held for even just one more year into March 2021, you were, it went from 3,800 up to 53,000. That's in 1 year. So if you were able to hold through that panic, that is the key that we need to get through. One interesting thing today, if we look at today's coin market cap, look at the trending coins here. Bitcoin is the #1 trending coin. That only happens when crazy stuff is happening. Bitcoin really hardly trends on CoinMarketCap unless it has a huge pump or there's bad news. Okay, usually it's the altcoins, the trend, whatever's trendy on the day, really it's the altcoins that are the big trenders on CoinMarketCap. Today, Bitcoin is the #1 trending coin, which means I think there is a lot of fear in the market, which means I think I expect a lot more volatility. And as we can see, the alts already are getting hammered. There is a lot of fear out there. People clearly think that they need to take some money off the table, make sure that they have enough money for themselves. The good news about it is we've been in such a crypto winter for such a long time that I do think all the heavy sellers, most of those kind of bandwagon retail buyers over the last bull run and into the bubble of altcoins, they already sold. So right now we're looking at, that we have been in a slight uptrend here in the last month or so. We have seen some alts do fairly well, like Rune and Solana, Render, Trust Wallet, a few others. And so, I think maybe in the last month or so, people have taken profit. And so obviously now we're seeing some people sell that off in this uncertainty. Although in the last hour or so, it's kind of stabilized. So it doesn't seem to be yet a huge crash. But the thing about these times where there's a lot of uncertainty in the world, you never know. At any moment there could be a very large crash. So I'm going to look at some of the alts that are really being affected and talk about that in today's video moving forward. But first, I want to continue to look at Bitcoin and just talk about what to expect in the cycle and what my strategy is going forward. As Cryptowise says here on X, bloodbath in the top 100. The tensions over the war in Israel certainly don't help high-risk markets. The only interesting note concerns the dominance of Bitcoin, which rose again above 51%, demonstrating that it could be considered the most mature asset in the Web3. Well, that is definitely obvious that it is the most mature asset in Web3. That goes without saying. But it is really interesting to see Bitcoin dominance spiking here, okay? Anytime we have volatility in the market, we do see people in crypto and Web3, they flee the alts and they go into Bitcoin. So I do expect the Bitcoin dominance over the short term here to continue to rise. We're up above 50%. Which is, that's kind of a big marker that we like to kind of watch is dominance over or under 50%. Now, in the major bull runs, you're going to see that we can dip even below 40% for Bitcoin dominance. And then when people want to rush to safety, if we look where the old COVID crash was, 2020, and so that's March. So we were up at around 67%, and then we peaked all the way at around 73%, and that was in January of 2021. Which coincided with Bitcoin surpassing its old all-time high. So when we kind of got back to in the fall winter of 2021, we hit that 20,000 mark again, which had been the all-time high. And then when it surpassed that, then we saw all the Bitcoin dominance also explode. But then the alts really caught up, and that's what this big dump here in the dominance is. And you can see we went all the way below that 40 mark, and that's really been where it's hovered. But now, since then, we are back up over 51%, and we could see this go even higher. If you are a chart person, you can kind of see that after 52%, there's no support, and we could be going up over to 60 and above in terms of dominance. Now that would absolutely mean that the altcoins are being wrecked like crazy, and we can look and see whether or not we think that might happen. But in any event, I do see a continuation of Bitcoin dominance. Whether or not it goes all the way up to 60, I hope not for the alt's sake, but I don't see us going below 50 again for a little while. Now let's talk about kind of the halving cycle, but let's take away the idea of this Middle East war or any other black swan event. Let's just talk about what our theories were, or some of the theories out there around the Bitcoin halving cycle normally anyway, and see that this might actually just fit into some of those theories in any case. So Wrecked Capital here on X had an interesting post the other day. It was the 5 phases of the Bitcoin halving. 1, pre-halving period. If a deeper retrace is going to occur, it will likely be over the next 140 days or so. In fact, BTC retraced 24% in 2015 and 38% in 2019 at the same point in the cycle. A 30% drop from current prices would see Bitcoin revisit the 20,000 mark. Okay, so that has been a theory that a lot of people, even before this war happened, thought that we would see another big retracement before the halving. And I would say that things like this, the uncertainty in the world, definitely, I think, ups the chance that we do see another big retracement some point in the next 140 days, according to Rect Capital. I would say definitely some point before the halving. Number two, he says pre-halving rally. Then 60 days before the halving, a pre-halving rally tends to occur. In anticipation of the halving, investors buy the hype in an effort to sell the news. I'm going to be really interested to see if this happens, because this has happened traditionally. We did see a rally even in the last cycle before the COVID crash. It was a kind of slow, steady rally. I don't know that I don't really anticipate a pre-halving rally unless the Bitcoin ETF gets launched. Then I do think we could see something. 3 is the pre-halving retrace. So a pre-halving retrace tends to occur around the halving event itself, especially if there is what he calls the pre-halving rally. If we do have the pre-halving rally, there does usually have to be a pre-halving retrace. In 2016, the retrace was 38%. In 2020, it was 20%. The pre-halving retrace makes investors question whether the halving was bullish catalyst on price after all. Number 4, he calls the reaccumulation. So the pre-halving retrace is followed by multi-month reaccumulation. Many investors get shaken out in this stage due to boredom, impatience, and disappointment with lack of major results in the BTC investment in the immediate aftermath of the halving. And then 5, which is where we all want to get to, the whole key to today's video, if you take anything away from today's video, is know that there is going to be a lot of volatility. We don't know exactly what it's going to look like between now and the next bull run. Just because we are very close doesn't mean that we aren't going to see some huge dips and some rallies before then. And all of us, okay, the key is hanging in there, getting to this stage 5 parabolic uptrend. Once the Bitcoin breaks out from the reaccumulation area, break out into parabolic uptrend, green, is during this phase that Bitcoin experiences accelerated growth on its way to new all-time highs. And he's got this chart here, and this does kind of, there's the COVID hit there, and then the halving is this blue line, which was May of 2020. And then as you can see here, he's kind of marked this red area as the boring area. It wasn't super boring just because COVID was going on and we did see a huge pump right after to hit that. But yeah, maybe in that summer, a lot of people sold, although there was a lot of stuff going on in DeFi and stuff. So if you're really into crypto, you know, none of us, everyone who was really into crypto was not thinking of selling because we could see everything that was going on. But if you were just into Bitcoin, you might have got bored and stuff before the real parabolic jump here. But that's definitely the key, is getting to just hang on through this time. Now, another crypto trader that I really like is Crypto God John. Now, he put out this chart, and this was before the Israel war broke out, but his was interesting and not one that I had seen really. He was expecting basically a post-halving dump all the way down to 20,000 right after the halving. Interesting, very different, and then a pump back up, but not seeing all-time highs again until well into 2025. I don't necessarily agree with that at all, but I do really respect Crypto God John, and that's another theory in terms of Bitcoin. I would say, though, look, if you're watching this video, it means you're probably into crypto and Bitcoin. So really, the whole point in the next year is going to be, how do we hang on? How do we accumulate as much crypto as possible at the lowest prices possible and be ready to take some profits as the kind of latecomers start coming into the crypto bull run and building up another price bubble. That is the whole key to surviving this next year. And that brings me to a brand new segment here on Cryptowise, which I like to call Cryptowise Connecting the Dots. Okay, as you know, on Cryptowise, this channel, if you've been watching us, that we are big fans of the blockchain Polkadot, and we think it has a very bright future, and we are heavily invested in it and many of its projects, and well, to be quite frank, it is not doing the best right now. But I thought I would use Polkadot as an example here, which I think this could go for any of the alts now. When I'm talking about this in comparison to what I was just talking about Bitcoin and Bitcoin dominance. Okay, so if we see Bitcoin dominance go through the roof up to 60% again, that would mean probably a major crash in the alts. Now, a lot of the major alts that are some of the top alts are fairly new and only been around since the last cycle or maybe one before. But as you look at DOT, okay, so DOT, if you've been following DOT from the very beginning, you would know that the original public price of DOT, so not the private sales or the initial investors who got in way early on DOT, but the public sale, it came out at $3 a DOT. But then when it hit the chart, so this is the Binance DOT Tether chart, and this is the weekly chart that I am looking at, and basically right from launch it went straight to $5, $5.30, and then it came down again and it kind of hovered around $4. Okay, and in recent weeks we have been at around that $4 mark. But as we can see, if we zoom in here the last couple of weeks, like right now the price of DOT is at $3.86, so it's gone below that $4 mark. And you know, another big crash could get us essentially to what that original public sale price was at $3. So I think that's kind of probably what we're looking at. Worst case scenario for DOT is going all the way down to $3 and then hopefully finding some support there. But I think that this is kind of what we're looking at in terms of worst case for some of these alts if the Bitcoin dominance continues to rise. And you could look at other charts and it would be kind of similar. Like we're basically retracing back to their previous lows before the last cycle started to even ramp up. So I'm not talking about lows within that cycle, because if we see within that cycle, we could say that DOT had lows of $9 and then it had a low of $12, then it was at $16 and then it crashed and then it was at $7, $5. And no, we're still trying to find the bottom for these alts. And so what I'm saying is, if we see this dominance of Bitcoin continue to rise, I think we're going to be finally finding the bottom of some of these alts. And in a lot of cases, could be a lot uglier than what you were expecting. I've lived through a few of these cycles, and usually the alts hit bottom prices that are even lower than I had anticipated the bottom to be. That would be the case for DOT too. I thought 4 was going to be the bottom for DOT. Now I think we're opening up a bearish case that we could see a $3 DOT. Now, speaking of DOT, I want to move on from price talk, cycle talk, but actually this fits in actually very perfectly, because there was an instant this week that had to do with one of the projects on Polkadot, and that is Polkadex. This is also a project that we've talked a lot about on the channel. We've had team members from Polkadex on the channel. We were early investors in it, not private investors or anything like that, but you know, we invested in many DOT projects, and Polkadex was one of them. Well, they got into a bit of a feud this week. I don't know if you could call it a feud. It was an argument of sorts with someone called Only DeFi Guy. Okay, he's at Only DeFi Guy, and he's just a trader. He's a trader, and he uses Polkadot. He's a Polkadot fan, but he's a trader. And he got into an argument with the team at Polkadex because, well, the bottom line is there's no liquidity right now in Polkadex. They're building their product, but there's this huge problem in Polkadot is there's no real liquidity for traders, especially for big traders. And there's no liquidity, so the price, you're going to affect the price either down on the downside if you're selling or on the upside if you're buying. And that is a big problem. Right now, DeFi in Polkadot really hasn't gone anywhere because of this liquidity issue. Now, to just sum it up, basically the team is saying they can't afford to hire what are considered market makers, okay, professional market makers. They usually make the market for trading, for exchanges, and Polkadex is saying they can't afford it, and they are trying to get some money from Polkadot, or they tried and they were blocked, and they're basically saying, look, we can't fix this problem on our own, we can't afford these market makers, so we're going to try to figure out how to do it in different ways. And basically the DeFi guy was saying, look, it's your project, and part of starting a decentralized exchange is having enough liquidity. It's your problem. You got to figure it out. This brings me to the bigger issue. Whether DeFi guy is right or Polkadex is right, for me, whatever. I could see both sides of it. Ultimately, they're both identifying a major problem, which is there's no liquidity on Polkadex or really any other DeFi product on Polkadot right now. But I came across this, and this is really the topic I want to talk about, which kind of stems from that conversation about Polkadex. And this, I think, whether you're in dot projects or any other chain projects, whether that be Solana or Algorand or Multiverse X, Cardano, whatever chain is, non-ETH chain is your thing. This could go for layer 2s, also some of the dApps on layer 2. This is really, to me, the pertinent thing that we really need to think about and examine as we're looking at these projects, asking ourselves, are they worth investing in either again or for the first time around in this bull cycle when we're going to kind of get to this bull cycle, or should we just be waiting for new projects and just invest in those alts instead? So this is an account, it's at Polkanotes, and it says how to save PDEX. When we analyzed PDEX on-chain data, we came up with theories that could explain this data. We posited Polkadex team had run out of initial capital raised and were now using the PDEX token to fund the project. This was vehemently denied by the team. They even called us ignorant. We argued that the price action of PDEX was due to the team dumping directly or indirectly. On-chain data clearly shows dumping, creating a death spiral. Now, what is the way forward? We will give our opinion, but doubt if the team will ever consider it. Their attitude to criticism has been on display during the PDEX AMA today. So just for context, they had an AMA, they invited the DeFi guy on, and really it wasn't a good argument. They were really defensive and were just defending their position, really didn't let him talk all that much, but ultimately he just kept saying the same thing at the same time, which is they don't have liquidity. And anyway, so that's what they're referring to here in terms of this PDEX AMA. They continue on saying, but for the benefit of the community, we will give our opinion on the way forward nonetheless. 1, immediately stop the use of PDEX to fund the project. It's not sustainable at all. 2, go for another round of raising capital. Current PDEX trading volume makes it not feasible to fund the project. 3, step up efforts to have PDEX on smaller exchanges with less demands to increase its trading volume. Even small increases can go a long way. 4, if the founders benefited from the initial raised capital and if they still believe in the project, they should recall the funds they benefited and put them back in the project. They may have miscalculated the budgets and time frame to project self-sustainability. 5, all PDEX which is supposed to be used for the project should be put under council control. This includes those funds currently under team control. This restores community confidence. The community now holding the bag have a right to contribute to how the funds are managed. Okay. This to me is pertinent essentially for every altcoin out there, but Polkadex is a very good example of it. Now, just to be clear, again, I'm not picking on Polkadex. I like the team at Polkadex. I like it as a project. I still hold some. I'm hopeful that, eventually what they're building will come to fruition and it will do well. I could be naming pretty much every Polkadot project I hold, which is a lot of them, and a lot of alts from other chains as well. So this goes pretty much, if you're holding an altcoin from the last cycle, this pertains to them as well. Basically, the question is, did they budget correctly? Now, what's really kind of a shame is most of these projects, they did their initial raise. So what happened is they did all these private sales, right? They sell PDEX token at a private sale price, which in theory should have been super cheap. And people, so they raise a lot of capital so that they can build the project. That's basically, it's like venture capitalism. That's how it works in crypto. A lot of these alts or these dApps did that at the height of the market. So they're like private, the price of the token right now is actually way lower than that private price. So they actually did raise a lot of money. And in theory, if they had turned all that money into cash, they should be sitting on a ton of cash to be building these projects. That's the question. What happened to all that cash? Did they properly budget it? Did they, because it was the height of the bull market, did they just get greedy and take huge salaries, take some out for themselves? Obviously, a lot of the team tokens were vested, so they didn't get that. And then the second question that is posited on that Twitter stream by Polkadot is this idea is the team right now, if they're out of money, are they selling PDEX basically to run the company and pay for all the company expenses? Again, this pertains not just to PDEX, to every alt out there. And what Polkadot is saying is essentially in this market, with the liquidity and the trading, if they are doing that, they're just going to kill the project. The project will just end up dying because look at the liquidity right now. Trading volume, $133,000. And what are they even on? They're on KuCoin, so that's where most of their things are. That's pretty good. They're on Ascendex, Gate.io. They're on Uniswap version 2, which is an Ethereum version of the token, which I'm not even sure because it got moved over to Substrate. I'm not even sure if that's even a real token anymore. That has no liquidity. But 24-hour volume on KuCoin is $23,000. So there's no liquidity in most of these alts. So the idea that they can sell tokens to sustain the company, yeah, it's just going to kill. This is going to basically make the token go to zero. And that's a problem for a lot of alts. But a lot of teams are doing that. And even in the comments from this thread, a lot of people were saying, well, yeah, we know that that's what teams are doing. How else are they supposed to pay for the team, to build the project, for the devs? This is a major problem. This to me is a huge thing that needs to be discussed. And on Cryptowise, it's really going to be my goal moving forward to get these team members on the channel, talk to them really about this specifically, so that we can hopefully have a clearer idea of how they are paying their bills. For the most part, what you would hope is that they still have a lot of the cash that they raised originally, considering they raised it at the height of the market. So something like PDEX raised, I don't know I don't know. I wasn't part of the private sale of Polkadex, but I can probably guarantee you that even maybe at the best price, they charged people more than 59 cents a PDEX. So you would hope that if they had raised a lot of money that way, that they had budgeted properly to get through a crypto winter, which is essentially 3 years. But my fear is that a lot of these projects didn't do that, and therefore are kind of scrounging to be able to continue operations. And as Polkadot kind of asks, they don't know for sure, but are you selling PDEX to essentially keep these operations going? Because if you are, the likelihood of you surviving, say, another year before something like a PDEX gets to kind of reap any rewards from the next bull cycle, the project could definitely be dead in the water by then. So this is a major, major problem, major question in crypto that we need to ask essentially every altcoin out there. And that's what I'm going to be hoping to do. I'm hoping to get people from these teams on the channel and really just ask them direct questions that a lot of people aren't asking about the tokenomics, about the runway, about their burn rate, and just see how healthy any of these projects are. Because if they are healthy, if they have been budgeting properly, I would be certainly willing to invest in them again. PDEX is a perfect example of that. I'd be happy to invest in PDEX if I thought they had the budget to be able to fulfill what their potential is, because I think their potential is really, really great. Anyway, that is a major crypto question that I think we need to be asking ourselves about all the altcoins that we like, not just PDEX, all of the altcoins, because it is a major, major question that needs to be answered. All right, guys, that's all from me today. I hope you enjoyed today's conversation about crypto. If you did, please smash that like button, subscribe to the channel. I would be forever grateful, as we do want people to be able to find us on the old YouTube, and make sure that you follow us on X at Cryptowise Guys. That's at Cryptowise Guys on X, formerly known as Twitter. All right, guys, thanks so much for watching. As always, until next time, I'm Milty saying over and out.